Great. Thanks, Haley, and welcome everyone. We've got a really positive story to share today about the 5G market development. So really excited to share this and that you folks could join us today. So let's jump right in. This is me, Chris Antlitz, Principal Analyst in the Telecom practice at TBR. My email is there. If you want to email me, feel free. To get a copy of the slides, please email webinars@tbri.com. Before we jump into the material, part of TBR's business is syndicated reports, and this is the list of the reports in the telecom practice at TBR. The two reports we'll be discussing today is the 5G Telecom Market Forecast and the 5G Telecom Market Landscape report. So we're going to be sharing findings from those two reports. We also have reports on the private cellular networks market, edge compute market, telecom infrastructure services, hyperscalers, operators, and other types of reports. So, and we do webinars on those other reports various times throughout the year as well. Let's talk about taxonomy before we get into the material. So there's two main ways we see 5G characterized or defined. One is it's an access layer evolution. So new radio interface and mobile core that are significantly more powerful than cutting edge LTE technology. So think about lower latency, higher throughput, all those types of benefits associated with 5G. There's also an end-to-end network evolution way that people think about 5G, where you're talking about the essence of the new network architecture, which is cloud-centric, programmable, automated, limitless capacity. That's another way that we see people generally think about 5G. For the purposes of today, though, we're going to be talking about the access layer evolution, so specifically the 5G NR and the mobile core and how that market is developing. So in this chart, we have the delineation between private and public networks. We're going to be talking about public 5G networks today. That's the information outlined in green. The portion outlined in gray is private cellular networks. That's a separate market opportunity. And I want to define what a public 5G network is. So this is situations where the CSP provides access from its own network infrastructure. So the telco is buying and operating the 5G infrastructure. That is the market sizing, what that includes. It's going to be the hardware, the software, and the services that CSPs spend on 5G infrastructure for public 5G services. And that also includes network slicing. There's some gray area there with who owns what, but we're in situations where the telco, we think, will own that infrastructure and provide network slicing to enterprise customers. As an example, we're including that infrastructure spend in the market sizing we'll be showing today. Real quick on open virtual RAN, we believe that this is the ultimate end state architecture for radio access networks. The industry will ultimately get here. It's going to be a journey. There's issues associated with this, but we will be talking about RAN architecture on this call and how fast we see open virtual RAN coming to fruition. These are some of the characteristics that we typically associate with open virtual RAN. I'm not going to belabor these, but essentially fully virtualized CU and DU, very important, CU and the DU. It's cloud native, microservices based. Hypothetically, we'll be running on COTS hardware, but it might be proprietary hardware for the hardware layer. There's different configurations that can be done there. Hypothetically, supposed to be hardware agnostic, cloud agnostic, automated, programmable, and of course, intelligent. And there's a degree of automation in there as well with the RIC and how that, the role that plays in the new RAN architecture. And I want to note that these same attributes apply to an end state 5G core, a standalone 5G cloud native core. Okay, so we'll jump into the key findings. So what we're seeing is global governments are driving 5G ecosystem development through stimulus initiatives and preference. We see some preference for domestic suppliers. There's some national security considerations, geopolitics, things like that that are associated with this. But what we see is that governments are spending a significant and unprecedented amount of money in the ICT sector to drive their economies forward into the digital age. And we're going to be sharing some data on exactly how much money and where that's being spent in a couple of slides. So we have this government stimulus. We have co-opetition increasing as CSPs collaborate to share 5G resources. So network sharing, we're seeing much more of this. A few examples of this would be in China, between China Mobile and CBN. There's also in South Korea, there's some rural sharing of assets in Europe, parts of Southeast Asia, even in the States. We see situations where there's some form of network sharing, some form of resource sharing for 5G networks to alleviate the CapEx associated with it and to help the operators with the economic justification to deploy 5G. So this is a trend. And then lastly, we are seeing on the consumer side, especially for now, incentives to upgrade to 5G. That is improving. And there's a few key reasons for that. One is the promotional environment for 5G compatible devices, specifically smartphones. Think about the new iPhones and the new Android devices. The telcos have a vested interest to get their subscriber base migrated to 5G as fast as possible. And the key reason for that is 5G is more efficient for the telcos to operate. There's a cost per bit reduction associated with it, and they therefore get a benefit by ensuring that their base gets 5G and migrating them as fast as possible. Monetization for new revenue remains limited at this point. We do expect that to change as this decade moves along. But the device ecosystem is starting to broaden on the consumer side especially, but we're also starting to see that on the business side where you have 5G compatible devices that can actually talk to the network. That's a key aspect to moving this ecosystem forward. So I want to talk about government spend. This is so important to this market. I want to really convey this. So since COVID began, we estimate that $30 trillion in stimulus was created globally for various things. This includes everything from furlough programs to bailouts for companies that got into issues with when travel stopped. Think about the airlines. It ranges to other job protection mechanisms, stimulus checks. All those types of things are included in that $30 trillion number. Of that $30 trillion, about 10% of that is allocated for the ICT sector. This is very important. And that number alone is unprecedented. Over the next 5 years, we're going to see $3 trillion in government money come into the ICT sector. This is over 5 years. This money started to be spent last year in China, and we're going to see that filter through the economy through the middle of this decade. As you can see in this pie chart, China represents 40% of that $3 trillion. In March of 2020, the Chinese government came out with a comprehensive technology roadmap plan for their country's digitalization, and that plan is $1.4 trillion. What we've seen since then is other governments came with their own packages. South Korea followed quickly after with the Green Deal. Green New Deal is what it's called. That was over $100 billion. That's since been enhanced, that package. It's closer to $200 billion now. We've seen the states. The states just passed the CHIPS Act and a couple of other critical infrastructure bills earlier this week, actually. That spend is included in this, in these numbers. And we've also seen the EU with the COVID recovery fund, 750 billion euros. Of that, 20% is allocated to ICT-related endeavors. So these are just some examples of the magnitude of capital that is coming into this market through grants, low or no interest rate loans, and various other support mechanisms for the market. I want to break this down a little bit more. When we look at that $3 trillion, some interesting things come up. The biggest bucket is connectivity infrastructure. This includes everything from rural digital divide related initiatives to Open RAN, R&D investment, to 5G R&D investment. Think about DARPA, think about other R&D mechanisms that are part of these governments that stimulate economic development. They are getting significant amount of money allocated to invest in ecosystem development. There's $65 billion in infrastructure-related spend in the recent U.S. bill, and there's another $21 billion in the RDOF. That's just the states. So right there, you've got almost $100 billion coming into the sector. Just that one package of legislation. So I really want to convey here how much money is coming into this market. And it's not just connectivity infrastructure. In fact, we're also seeing capital coming into semiconductor space with the CHIPS Act. That's $52 billion. That's just the states. That's not including what China's spending, Japan, South Korea, Europe. They all have similar type of mechanisms that are coming online. There's also data center related investments, IoT, think about connected transportation, think about smart cities, robotics, AI, quantum computing, and then other ICT subsectors includes things like PCs, getting PCs to school children that maybe their family can't afford it. There were billions of dollars spent on that in the last year and a half. Was a huge windfall for the PC manufacturers. That all of those things are wrapped into these numbers just to convey magnitude. And this tidal wave of spend is gonna continue to come into the market over the next 5 years. This is very, very good news for the vendors that support the telecom operators, as well as enterprises that are getting into this domain. Okay, so against that backdrop, we see an unprecedented curve of investment in the 5G market. 5G is coming faster, bigger, and broader than any prior generation of cellular infrastructure. The 5G cycle is likely to be fully deployed globally within 7 years. That contrasts with LTE cycle, which took about 10 years to build out globally. That is an unprecedented pull forward of market development. Now, there's some things that help that. NSA standard software upgrade of existing radio infrastructure. There's about 10 million base stations globally that are software upgradable to 5G. That obviously helps operators to deploy 5G much more rapid manner than in prior generations where you had to put new hardware into the field and operationalize it. So the softwareization of the network is helping drive this ecosystem development at a much faster pace than prior. Then, of course, we have the government spending. We actually have a list here of some of these growth drivers. So government spending, and we had COVID-19, which is driving significant demand increase for digital transformation on the enterprise side, as well as demand for broadband on the consumer side. Fixed wireless access is implicated in that. There's also technologies like dynamic spectrum sharing, where operators are able to, with NSA, deploy LTE and 5G. I know there's been some technical challenges with DSS, but I think the vendors are working through those. It's just another example where CSPs can deploy 5G much faster than the way prior network generations were deployed. What we get for market development is a curve such as this, where that blue trend line there at around $50 billion is the historical average spend, annual average spend on cellular infrastructure. Basically, what we're saying is that in 2022, just for 5G related infrastructure, that number is going to exceed the historical trend line. That is unprecedented. That's not even including the LTE and legacy. That's just 5G infrastructure. That includes 5G NR, that includes 5G core, that also includes product near and product attached services to that infrastructure. So that's hardware, software, and services all in those market size numbers. So we have an unprecedented demand curve. The challenge is going to be the supply side. As we know, there's the chipset shortages. There are some issues with shipping, getting product to the customer site, getting devices to consumers. These are things that could delay a little bit some of this market development. I would say this is our optimistic base case, what we're showing here. If the supply issues get a little worse than they are right now, we could see that demand push, some of the demand from 2022 pushed out to 23 and 24. We've also got in the States, we have the C-band issues right now with the FAA and the FCC trying to work through interference and potential issues with the airplanes and the instrumentation there. That's another thing that could delay market development. But I think those things will get worked through. We would expect that the market demand curve is still going to go above trend line within the next 2 years. And the demand for this infrastructure is going to be unprecedented historically. So this is a very overwhelmingly positive story for vendors that are supplying this market. I want to break down what this looks like, and we're going to show some regional numbers, some other segmentation as well. Here we're showing CSP 5G spend by RAN architecture. So we have traditional RAN, which is the classical architecture, so DRAN, CRAN, and then we have Open RAN and vRAN. So that would be your virtual CU, virtual DU type implementations. Basically, despite all the talk in the industry, the reality is that open virtual RAN, there are technical challenges, there's feature parity issues, there's legacy challenges that need to be worked through. How do you migrate from traditional to the new architecture? Our market size here factors in all of those things. Even still, we do believe that in 2025, 20% of the RAN of the 5G market is going to be on an open RAN and or virtual RAN architecture. So it's still a significant number, but it's going to take some time to get there. And the traditional radio architecture is still here to stay, has quite a bit of play left. The software upgradability of the LTE infrastructure, I mentioned 10 million base stations globally. That helps operators stick with the traditional RAN and mitigate some of the migration issues from making the jump. It can help. It can also create some more complexity. It depends on the operator's situation. But the key takeaway here is that it's going to take some time for open virtual RAN to mature and go mainstream. So the second half of this decade is really going to be where we see broad proliferation of usage of open virtual RAN. It's going to be the second half of this decade. So now if we break the market into by use case, we see some interesting trends here. So the vast majority of spend, I don't think this is a surprise, is related to mobile broadband. So this is about, we talked before about cost per bit and how telcos are trying to build more efficient networks and protect margins in the core connectivity business. That's really what this is about. That's the dark purple. Now, what's interesting is the fixed wireless access and the other use cases. So I really want to talk about that. Fixed wireless access with 5G, depending on the spectrum that's available, is a fiber replacement. I'm conducting this call right now over a fixed wireless access connection. It works really, really well. And I can say from personal experience that that FWA is absolutely a disruptive threat to fixed access. And with 5G, when you start to think about roadmaps and feature enhancements that are coming down the road, 5G fixed wireless access is a very attractive use case, profitable, scalable use case for CSPs. That's what we see, and we have significant evidence that underscores that. On the other use cases, it's a little early days there, especially on the revenue side. Right now, we see pilots and trials taking place with MEC and 5G, experimentation on what could business models look like. There's a lot of that going on. In terms of revenue generation, what we're showing here is infrastructure. This is the infrastructure input cost allocated on a use case basis. That's what this data is showing. We do believe that CV to X, asset tracking, asset monitoring, and robotic control, these are going to be some of the preliminary use cases that get commercialized leveraging 5G. And if you look at Ford, GM, some of the other auto manufacturers, they're all talking a big game about 5G. They see the potential there, and there's going to have to be implications to the telcos to support those wide area network requirements for those connected transportation assets. That's just on the CV to X side. So that will materialize, especially when we get closer to the middle of this decade. We're going to really see those things start to proliferate. So think about that more on the IoT side for where the new use cases are going to go and leveraging 5G for that, for the low latency, high bandwidth, and other characteristics that 5G provides versus other wireless technologies. Okay, so if we break the market by tier of operator, and specifically we tiered operators by number of connections. So we have the definitions on the side there. Please note that hyperscalers are included in the tier 1 CSP segment. So companies like Rakuten that has their own mobile network is in tier 1. The evolution here and the key takeaway is that tier 1 operators are spending well over 70% of the total infrastructure amount for the 5G market. So tier 2 operators are going to grow in the mix over time, as well as tier 3. Tier 1 operators, I mean, they're spending, if you look at China alone, China and the States, the magnitude of capital that those operators are spending relative to what smaller telcos in Europe are spending, you could start to see a distribution like this. And a lot of this is driven by aggressive nationwide timetables. So if you look at T-Mobile, Verizon, and AT&T in the States, those, and as well as Dish, those are aggressive deployment timetables for 5G, aggressive rollout timetables. That's very much driving the tier 1 segment and driving that spend to peak faster than what we are going to see for the relatively smaller telcos. Okay, so by region, a couple of takeaways here. Asia is spending the most on 5G compared to all of the other regions. So Asia Pac is the dark green block on this graph. And this is very much China, but South Korea and Japan are also upping spend on 5G. As we know, South Korea was an early adopter of 5G, and then Japan is a fast following China and South Korea. Significant money being invested there by all of the major telcos. We're going to start to see India ramp up by the middle of this decade. There's a lot of money that's going to be spent there. Southeast Asia, we have Malaysia. We've got some other countries in that area. So the key takeaway is significant money being spent in Asia, led by China. And if we look at the other regions, the U.S. is the second largest opportunity. And we talked about aggressive deployment timetables. And then we have Europe is relatively lagging the other developed markets, although we do see some encouraging signs with certain operators that are accelerating 5G to an extent. But there is quite a bit of reliance on LTE there and NSA. We're starting to see SA deployments in Europe, which is very encouraging, but they're going to need to move a little faster to catch up to where Asia and the States is heading. And then lastly, we have CALA and MIA, which is the emerging markets, developing markets. Those areas are going to be, they are in some cases deploying 5G today, but it's very small scale, mostly urban-centric deployments. We're going to start to see that proliferate around the middle of this decade when the developing markets start to become a significant component of the 5G market. This is for, I'm specifically talking about infrastructure spend here. These are not revenue, these are not CSP revenue figures that we're showing. If we break the regions by China versus rest of the world, I really want to convey how much one country is driving the global ecosystem. China accounts for a huge portion of the 5G infrastructure market. And they will be the largest country, contributing country through the middle of this decade. Really just wanted to convey here that, you know, relative order of magnitude, what is really driving this market forward. Okay, so we're going to do key takeaways, and then we're going to open it up for Q&A. So infrastructure, so this is a overwhelmingly positive story for companies that supply infrastructure for the 5G market. We're going to be above trend line, most likely starting next year, absent any major additional supply shocks. This is a tailwind for the NEP companies and other ICT suppliers. And we expect that demand is going to remain robust for at least the next few years. So this is a multi-year growth cycle that we're in, driven by government money. So government money is helping the business case justification. It is seeding ecosystem development, and it is pushing the private sector to invest faster than they otherwise might have in this infrastructure. So this is a direct and indirect tailwind for the ecosystem. We have competition heating up. I know in the States, we are seeing a very promotional environment for 5G smartphones. Operators are pushing 5G into their bases. They want their subscribers to get 5G as fast as possible. And we talked about some of the reasons why that is. The efficiencies, the cost per bit on LTE versus 5G. These are some of the justifications to do this, and to do this as fast as possible. This is also pushing operators to pull forward investments, not only in the coverage scope, but also in the NSA to SA transition. So we are seeing situations where telcos are being pushed by competitors to invest faster in SA versus sticking with NSA, which is what a lot of them were planning to do originally. And again, this is very much driven by competitive advantages that are inherent in the new architecture. When you move to a 5G SA architecture, you get to benefit from those characteristics that we talked about before. The economic benefits, the agility benefits, the scalability benefits of that architecture. Having that SA core and using an Open RAN, vRAN architecture enables a telco to get those benefits. And then lastly, I want to caveat with the supply chain issues. This is real. This is impacting all of the vendors in some way. Some are managing this better than others. I do want to make a note of that. But the reality is that all companies are facing this. And this could extend itself into 2023. If you look at what the chip makers are saying now with guidance, we just had a recent earnings round come through. The gist is that the chip shortage is going to last through at least the second half, through the first half of next year for the chip makers that are in the best position, and then the ones that are still trying to catch up with the backlogs and increasing capacity, it's going to be into 2023. So those are things, that's one aspect of the supply situation that needs to be navigated, and that could delay some of the timing of ecosystem development, the things that we talked about before. Okay, great. So that was all the content, and we'll open it up for Q&A. So I'm going to go, if anybody has a question, you can add it to the Q&A box at the bottom and type the question in. And Kelly, do you see any questions in the queue?
Not yet. We'll give people a chance to type those up and submit them.
I'm going to hit refresh. Okay, we have some questions coming in now. Just again, the Q&A box is at the bottom of the screen. Just click that, and then the prompt will come up where you can type in your question. Okay, so the first question is, does the revenue for use cases feel surprisingly low given 5G's capability? So thanks for the question. So just to clarify, we are showing infrastructure spend by the CSPs for 5G infrastructure. That's what all of the data in this report is showing. It is not showing revenue CSPs obtained from their customers from 5G use cases. So with that said, on the revenue side, as of right now, revenue from new use cases for 5G, it's still early days. There's a lot of experimentation going on. We do not see any significant opportunities. I think that we're going to see, and I'm actually going to go back to that slide as I mentioned this. So on the use case slide here, where we're going to see new revenue for telcos from 5G is going to come from the IoT-related use cases in connected transportation, things like asset tracking, robotics control. If there is a network slice that's being provided to an enterprise, say a manufacturing environment, low latency for the manufacturing line, those are areas where you would see the new revenue, but we're not there yet. There's still, I think we're still, at least another year or two away from any meaningful revenue from those new use cases. Where there is significant revenue and margins is fixed wireless access. And I really want to stress this. This is an area where telcos today are making significant money. And actually, I'm going to use one example. T-Mobile, we estimate that is a multi-billion-dollar new revenue opportunity for T-Mobile is what they're doing with 5G fixed wireless access. So they're literally going to make several $billion in new top-line revenue at a very attractive margin structure from their network offering fixed wireless access use case. Other operators that are spectrum advantaged, like T-Mobile is, are also jumping on the fixed wireless access bandwagon. This is a competitive threat to fixed access providers. And in some cases, it can be much more lucrative. It's less costly to deploy versus traditional fixed line, fixed access technology. So That is an area that we see many telcos globally, well over 100. I think the number's over 150 now, operators globally. It's something like that that are either already deploying, and that also includes ones that are planning to deploy 5G fixed wireless access. That's a global number, just to show you the magnitude of the opportunity there. So that's really the use case I would focus on. And then other use cases beyond MBB and FWA will come onto the scene over time. Okay, so we have some other questions here. So the next question is top industries for adoption using the technology. So we talked about the car manufacturers. So GM and Ford have been very vocal about this, about 5G and how they're planning to use it. They're planning to use it in multiple ways. So in their manufacturing plants, they're also planning to use it in dealership environments, and they're also planning to use it in WAN environments after it's post-sale. So after they sell the car, there's a 5G connection to that vehicle. It does predictive maintenance. It sends diagnostic information to the dealer. It can optimize the maintenance of the vehicle. It can drive analytics. It can drive software updates to the vehicle. So it can enhance the value proposition that the car manufacturer can give to the customer. There's other benefits as well. And 5G is viewed by those companies as a key enabler to support those types of use cases. Revenue will come from that. But again, we're waiting for chipsets. We're waiting for compatible modules that can go in those vehicles. We're waiting for a little bit more maturity and readiness for 5G specific for those types of use cases before we're going to see a scale and a proliferation of those use cases and then the revenue that's associated with that. So, so that's just one example. Other industries that I would keep an eye on, retail. Retail, you could think about it different ways, using 5G for product delivery, so shipping. You can think about it for optimizing the in-store experience if you're using it for spatial awareness. So for example, you could use 5G video analytics, computer vision to look at store shelves and see what's empty, and you can optimize inventory restocking using computer vision. You could use 5G for something like that. You can use it for digital advertising inside of the store. Some of that will be private networks, but there's also going to be a play for service providers to provide network slices or their infrastructure inside of those environments, slicing off of their mobile core assets, you know, to provide some of those capabilities to their enterprise customers. So there's different types of use cases, different models, depending on the industry, where we see value, and there's quite a bit of experimentation going on. So yeah, manufacturing, retail, mining is another one. Again, there's a lot of private networks there that we're seeing, but there are some situations where a telco is providing access to that. Utilities is another industry. Those are the ones that I keep an eye on. Okay. Any other questions? All right, great. So Haley, I think we're good.
Awesome. All right, everybody. Thank you so much for your questions and for attending today. Please feel free to reach out to Chris with any follow-up questions directly. If you have a few moments, it would be greatly appreciated if you could fill out the survey that's going to pop up on your screen. A replay version of today's webcast will be available after the event and will be sent to you all via email. And to view a list of our upcoming and past webinars, please visit tbri.com and be sure to join us on Wednesday, December 8th for our last webinar of 2021. It's going to be 2022 Expectations, Insights from TBR's Professional Services team. Thank you all and have a great rest of your day.